Welcome to Beyond the Document, the podcast from Formpipe, where we discuss everything that is output, document and customer communication management. Today we're focused on working within wealth management space within core banking, and specifically working with Temenos in that banking vertical. We're going to look at how it's changed over the years, what regional differences occur, and of course the current landscape. So it's great to have a guest who's worked in this area for a number of decades in the form of John May of CBTW, who until recently were known as One Aston. So welcome to the podcast, John.
Hi, Ben, and thanks very much for having me on. It's a pleasure to be on your show. Do we call it a show?
You can call it what you want, mate.
Yeah, and thanks for saying I've been in this area for a number of decades. I mean, technically it's true, but it's quite a small number. I'm not that old, right? But it is a number of decades. You're right.
I know. I'm insensitive sometimes, John. But given that intro, I think there's only one place for us to start today, and really that's by you telling everybody listening what's been happening over the last couple of years at One Aston, or what we now call CBTW.
Yeah. Okay. Let's use One Aston for one last time, shall we? So, to give people a quick intro. One Aston was a business which we were formerly known as, and it started about 12 years ago, and we were formed as specialist delivery partner for this Temenos Wealth product. Many of us had come from that product in the past, and maybe we'll touch on that a bit later, right? Because it's relevant when we talk about experiences. Anyway, we grew our business really successfully. We expanded geographically over time. So once we started in Singapore, right? And we sort of conquered APAC, because 12 years ago, wealth management technology was really growing down there, and Temenos was really successful. So we started there. Then we grew geographically over, firstly to North America. We did some successful projects there, then over to Europe, and then through LATAM. And the other thing we did was we diversified through proposition as well. So we don't just do wealth. We also moved then into the core banking, the transact side that you work a lot on, and then digital channels as well. So if you fast forward to like a couple of years ago, we had a really successful multi-proposition international business, about 250 Temenos experts. And then what we did is we really embraced the integration with our new parent. So collaboration betters the world. That is both what we believe and the name of our company, right? So we abbreviate that to CBTW. And we just recently, last month, completed the integration and the rebranding of that. So we took 2 years to do it. We took some time, but we're all now part of a much larger organization. So we're now CBTW Banking Technology Solutions. I'm one of the service line leaders in that, and it gives us all access to great scale. So we're now part of this international IT company of about 3,800 people. So we've got great scale, we've got different capabilities, so we can help our clients with different tools and toys during our projects. So it's really exciting. So it's a really important time for us.
Yeah, and it gives you that huge footprint across the globe, doesn't it? I've seen that from our dealings with yourselves. And I think that's one thing that we can talk about here, because most banking software vendors will look globally. We will look at all the markets, even though you do have a better success rate in different areas. Often people perform better a little bit closer to home, but that success can be determined by, unique factors within the industry. We talk a lot about data sovereignty or the appetite in different regions for adopting new technology, or even the economic trends, where we've seen Europe a little bit suppressed, other areas have gone on and performed really well. But outside of those general banking topics, what do you see on a regular basis within wealth banking?
Sure. So if we zone in on wealth, you are so spot on to bring in like regional differences, because wealth, you don't want to trivialize it too much, but you can almost split it down the middle into mature wealth markets and new wealth, growing wealth, emerging wealth. And you need to be really conscious where you are in the world when you're talking about the drivers for change, right? But if you set that aside for a minute, and if we also sort of set aside the omni trends of moving to the cloud and digitalization and the AI, let's just set them aside for a minute. I would say the three big specifics to wealth that we see right now is the challenges around intergenerational transfer of wealth, right? That's a big one. And again, it depends where you are in the world. More mature markets are more concerned by that than others, but we can come on to that. The real clear need today to have a vision and an implementation of your ESG values within a business. That's critically important today, and it sort of ties into intergenerational wealth transfer if you think about it. And then the third one, which I know is very close to you and your colleagues at Formpipe, is hyper personalization and really targeting personas with communications and interactions. Yeah.
What within that hyper personalization do you see as being important within the wealth market?
Well, so personalization's always been important to wealth because, it's a personalized service. You're paying a premium for a premium service. You do get stuff that's tailored. Now, we've always had the concept of, the importance of the relationship manager. So historically, that was very, face-to-face, very analog. But over the last 20 years, we've made, immense progress in terms of digitalizing these communications. And, the work that, you and your colleagues do in terms of communications, in terms of client statements and the interactive nature of that data and the way it's presented is really, really important. And then the other aspect of wealth, which is the tailoring of the investments themselves. And we'll come on to that when we talk about ESG, but, personalization and persona targeting is as much about what you do with the investments as how you do the communications. The two go really hand in hand in wealth. So I think what we've seen in hyper personalization has been really impressive in recent years. And what it's now doing is it's now helping those organizations that have been ahead of the curve be more comfortable with the intergenerational wealth transfer.
So that's interesting from our point of view, because I guess we only sit on one side of the fence of that hyper-personalization, because we're looking at the way that you communicate to the client rather than maybe the way that you actually run the investments on behalf of that client as well. But I know, when you're looking at targeting different personas, we can have a number of parameters, but then it's also interesting that you drop in there. We still have the relationship aspect that drives wealth management still as well. So maybe on that intergenerational wealth transfer, because that's an area I'll admit, John, I'm not that au fait with. Being a Northern Englishman, I don't think I've got that problem either. But could you give a bit more insight into what you're talking about there? Yeah,
sure. Good point. If you're sort of anywhere outside of the wealth center of like gravity, you probably don't worry about these things, right? I don't personally. My wealth's invested in my children. I'm hoping they'll come up trumps at some point.
Well, I was about to say, I don't think it's a problem for my kids, but you never know.
No, not directly. But wealth managers in mature markets, right, especially here in Europe, I've seen it at first hand over the last 20 years. There's been a growing acknowledgement that the values and the way that the individuals want to interact of the generation that are coming, maybe the generation just below us, Ben, right, are markedly different than they've been used to working in over the last 20, 30, 40 years. And of course the fear there is that the assets associated with those clients leave the business, because this is an asset retention and an asset growth business. Fees are earned based on the assets that you have in your organization. So there's been a lot of innovation in Europe and other mature markets about tailoring the way that they both engage and the investment styles that they open up to those individuals. I mean, if you want to move on to ESG, it's probably quite a natural place to move, actually.
Yeah, I think we could do it. But I get what you're saying as well here, because you hear the stories of, let's say 8 generations of a family all banking with the same wealth bank, and they will have looked after their assets very diligently. But we know the access to other markets now is growing. And maybe the loyalty is more now based upon service. Or let's move on to ESG and talk about how important that is, especially, I know it's important to our generation, John, but again, to the generations below us who really do care about these things when they're choosing a service provider.
Yeah, you're right. We do care, and I don't think we should underplay that. But now, from the pure business perspective, for a wealth manager, it's not a nice to have, it's a must have now, right? So they must have a really clear vision and an implementation plan for ESG. And, I talked earlier about the fact that I've been around this product since the late 90s, right? And I remember really clearly, just a bit of history on this, I remember really clearly doing, building demonstration environments and actually implementing projects in the early 2000s. And the E of ESG was already quite prominent there, frankly, in wealth management, because the way it would work was, if it was a discretionary proposition, then the wealth manager would agree, asset allocations and targets and investments, and they would normally they'd be based around traditional target factors, right? So you'd want geographical exposure at a certain percentage, you'd want risk type, you'd want PE ratios, or if it was fixed income, you'd want duration, all the normal stuff. And then you'd have a second layer where, the client would say, oh, but I don't want to have any petrol stocks, or I don't want exposure to these industries. And so, and the technology was pretty smart, I would say, even back then. It would be able to rebalance, generate a bunch of trades, but then exclude those and rebalance again. It was already quite intelligent. But where we are now, though, is that sort of secondary consideration is not how it works. It's a prime consideration now. So actually, ESG ratings of instruments and financial vehicles are a key tenet of the whole investment strategy. So when the wealth manager, the relationship manager, advises or even takes a discretionary mandate, it is one of their prime discussion points. It's not at the bottom of the questionnaire. If you like to think of questionnaires, it's at the top. And the other way it's changed, Ben, is we were very E of the ESG dominated, I think, back then. These new factor ratings, they take in the whole ESG, or they attempt to. And the other thing we've seen in terms of technology, which is very interesting for us, is innovation in the G bit. The G. So because the generation that are going to inherit this wealth, they expect to have much more visibility and control on the governance of their underlying investments. I think we were quite relaxed 20 years ago that if you invested in a business and you got invited to the AGM, you didn't go and you didn't even express a vote. Where now these tools are opening up much more engagement with the AGM process.
It's so interesting. We did an internal video recently around our own ESG rating because we've recently redone that and set some new commitments and benchmarking, which will be released next month. And obviously, we're part of the supply chain, so we pass that down to our clients as well. I do think because now in 2024 you've got access to that information so much easier. Within 20 minutes you can do a couple of searches and be find fairly reliable sources of data, when back in the late 90s you would have to probably physically go to that headquarters to actually get that info. So it makes complete sense. And I guess just pulling in that ESG and then the intergenerational stuff, what you're saying is an organisation has to be very clear and committed, both in their communication, but then the execution behind, to make sure that they're delivering on that promise.
Absolutely, the execution, and that's where where you and I come in, right? We can help them turn these visions into technological realities, and the reason I bring these three things up is because they come wherever you are in the world now. They're important on every project we work on, and that's just one final point on the ESG, because it's really close. It's close to my heart at the moment. Is the technology is there, right? So we implement Temenos Wealth, and the Temenos solution is superbly suited for ESG aware investing and ESG aware communications. The thing that the market is still challenged by a bit, frankly, is the data, the underlying data. There are many good quality providers of ESG data, right? But there's no de facto standard, so nobody really agrees which one is better than that or which one is official. So I think there's still a bit of work to do on that, but the technology to make it flow through and build the proposition is all there. It's all there.
So there are three really interesting elements, let's call it, of the wealth market, and we've already touched on the fact that the actual business may still be reputational, relationship driven. Then let's bring in the technology then, and really where you guys sit, because it is more competitive out there, and even the most traditional, well-known, well-branded wealth bank will need to deliver a digital component. So what's happening now within that part of the world?
Yeah, that's a good point. Actually, it's something that I always like to think about, because you see the trends and you think you know enough about them, but you're trying to think, well, okay, who's going to be the winner then?
Yeah.
Which proposition wins in the future? And again, we need to be a little bit conscious of where we are in the world when we look at these things. But if we think about a mature market, I always like to anchor it around a mature market, because then you can see the real themes. I think there are sort of three technology plays going on at the moment, and some of them, at least one of them, has been going on for a while. if we're honest, right? And it is the first one you touched on. So the traditional sort of private bank or wealth manager for the high net worth or the ultra high net worth bracket. If you're established and you're in that bracket, you have probably invested quite heavily in technology and change and strategy in the recent years. So you've got some good tools, right? You've got good tools. You're probably on the path. You're well on the cloud path, right? And so therefore you will scale well. You'll be pretty resilient. All those things. What these organizations are now doing is they're seeing the real opportunity to sort of go down the wealth scale. And those propositions, they tend to scale pretty well, and they can target the mass affluent and the high net worth emerging wealth target.
So pick up a higher volume of people in that next bracket down. Yeah, okay.
Absolutely. And that's so it becomes a sort of, it's not quite a copy and paste play, but it is a reuse my capabilities and scale it out, right? And that's a play that's happening quite widely and has been for a while. Now the fight back, of course, comes the other way around. If you like to think of bottom up, right? Then you've got your retail banks and your retail asset managers that are also seeing that part in the middle as an opportunity, and they're approaching it in my experience in slightly different ways, right? So the way that they're looking at this is in terms of innovation and partnering with ecosystems, because they have great strength typically in the retail aspects of this, and they can deal with the markets and so forth, and they can deal with cash and everything. But to get those specialist tools that are needed to serve the wealth market, they tend to partner. And so you get this nice, we'll come back to the word collaboration, which is great for us, right? You do see projects which are multi-vendor, right, and collaborative.
So I presume in that space, the retail bank, the universal bank would use some internal systems that they've already got and are well tried and tested and compliant, and then layer on top what they need to compete in that area. Yeah,
best of breed stuff on top. And for us as technology sort of project delivery people, that makes it slightly more complex, but certainly interesting, right? Because you see different models emerging. The other thing to mention about that is it is often an intermediate strategy. So it's almost like a tactic where you test whether the demand is there, and then you may implement your own strategic go-to-market solution for it, right? So it can be a little intermediate step. And then the third one, which is really interesting for us, I think, in newer and emerging markets, is the genuine entrepreneur, right? The challenger. Now, in wealth, historically, that's been really tricky because the barriers to entry are pretty high. Because we've already talked about it, right? It's around reputation and relationship historically. So how the cost of acquisition of clients is really high. But that's coming down now because technology enables so many things that we couldn't do previously, right? In terms of engaging and attracting new market.
And without being too naive there, John, could you have a traditional ultra high net worth individual who is now comfortable doing the majority of their wealth banking activities via an app?
Absolutely. And so there's some interesting little trends around this, which is if you go to certain markets in Asia, for example, you'll see big brands, right? Big, well-known blue ribboned wealth management brands. And they launch digital only services, but they launch them under a completely new, they do an incubator company strategy, completely different. And they then often see that their high net worth clients migrate over to that new, so back to your point, they were perfectly comfortable dealing completely digital. The proposition just wasn't there for them. But once it opens up, then the demand comes. So that, I think, that certainly in emerging markets, that real challenger model is now feasible. It used to be really difficult, but if you think about cloud, if you think about the adoption of SaaS models for almost everything now, the barriers of entry technically are coming down, and also regulation is also a little bit easier to consume than it used to be as well, right? So we do, and we work with Temenos on quite a few opportunities of these where you're surprised that someone thinks they could enter the market, but they've got good business cases. It's possible.
I hear exactly what you're saying. I think also from an individual's point of view, probably the appetite to invest in different markets or across different borders is increasing as well. The size of the opportunity in wealth is huge. We've got so many challenges in the world today that we know about, but the world is getting richer. More high net worth individuals are being generated every day, every week. So I see this field is growing and probably then spurring little niches within its own field as well. And And as we do grow in that way, where do you see the future? Where do you see the next couple of years? And especially from CBTW's point of view, where do you see your focus?
So for wealth, like just back to your first point, that you can read a report every month if you want that shows you that global wealth is increasing, right? So there's no doubt, and we live in it, don't we? We travel quite a bit, so you see it firsthand. You really see it. Now, I don't know whether that wealth is being well distributed for society and positivity. I don't know, right? That's
somebody else's podcast, yeah.
yeah. You need someone smarter than me for that. But anyway, what flows down to us is we see a real genuinely interesting and exciting mix of opportunities. So you've got all of those three sort of sectors of the market innovating in different countries. So you've got the big established players. They still need to continue to innovate because they still carry some legacy cost, right? So they're under fee pressure over time. So they need to keep innovating. There's lots of change needed there. You've got the retail players that are coming up into the market. Great innovation, really good ideas. And then you've got these fascinating challengers, neo wealth players, and these are springing up. Again, I don't like to generalize, but we see much more of that across Asia than anywhere else currently. Maybe that's Ben just because where we are, so we just see it there more. But there's huge potential there because of you touched on it earlier, the demographic trends and the wealth trends. There is so many people that are underbanked and under wealth served. So I think that the future for you and I in these programs is really exciting.
Yeah, I agree. And every time we look outside of Formpipe and we look into the market, this is one area that I just think is fascinating about where it could go and start to serve more and more people.
Yeah, absolutely.
So, John, that's been great. Lovely to take a trip through the wealth market and get your insight to it. Really appreciate that. Thank you for listening to Beyond the Document, and thanks again to John for joining me today. If you want to find out more about what John and his colleagues do, then look at John on LinkedIn. That's JON, John May, or collaborationbetterstheworld.com. I'm Ben Saxton. Catch you next time on Beyond the Document.